and thanks for everybody joining the webinar. It's great to be able to talk one-to-one with so many interested people, and I believe we've got more than 100 out there doing that. So that's excellent. So thanks for joining. I'd just like to reiterate what Andrew said about getting the DFS out and thank the team here. It's been a wonderful effort over such a short period of time to come out with the PFS initially, our initial reserves, updating the resources and updating the resources again, commencing drilling, having 4 rigs on site, building the team, and now getting a DFS out in about 18 months since we acquired the project. Now the DFS was a little bit late, as has been highlighted. That was about 20 working days. It was $140 million review, and it did include 19 external consultants to put that together, and the actual DFS report itself runs over 500 pages. So it was a little bit delayed. Fundamentally, that was because of the change from moving to wet tailings in year 2 to dry stack tailings early on, and we'll talk about this more in detail. But that was an engineering package that wasn't envisaged when we started the DFS study, but became apparent that that was the optimal way to go as we progressed. So that pushed the timeline out a little bit, but it's out there now, and it's one of the best you're likely to see. We were recently presenting at the RIU conference in Sydney, and it's looking pretty good, and all the comments are incredibly positive on that. I just need to know how to control this screen, Andrew.
Just down the bottom, use your cursor. And
yes, sorry.
Yeah.
My ignorance. There we go. Sorry about that. So the DFS study, as we say, released last week. There's been a huge amount of interest across the market. It is one of the best DFSs that a lot of people have seen. And we look forward to getting this out and talking to financiers, and in fact that's already happening. I think we're in about meeting 4 already this week with potential financiers, including one before we even started here. There we go. So a quick review there. As we say, we acquired the project late 23. Effectively, we got the keys in January 24. So we're not that far away from that now, and we've moved through a huge amount of tasks to move the project to where it is. That's been possible because we had a very good team on site when we started this. We've expanded that team, we've expanded the team in Perth, and we're now getting to sort of a level where we can handle all the tasks going forward. MIQM helped us with the DFS study. They're an excellent group. They're perfectly sized for what we're trying to do, and have recently undertaken expansion at Tomingley just down the road from us, so they're experienced in the area, and it's been wonderful working with that team and the metallurgy team as well. At one stage we had 7 metallurgists working on this across 3 companies, and they came together very, very well. So it's been a big task to get to where we are, and I'd like to thank everybody for that. Where we do sit now is we have a wonderful project. We've run this at 3 different scenarios. One, a base case, which we always said we would, which was arguably very low. A spot price, which interests people, but we don't really use those numbers for anything. And what we're mainly talking about today is our mid-range numbers, and we think that these are even low by today's standards, but probably the best ones to talk about to be conservative across the board, but also highlight the economics of the project. So our NPV post-tax 700 million with an IRR of 102%. Is pretty spectacular, and that's running at a gold price of 28.50 and an antimony price of 41, and I think today, last time I heard, it was trading at 62,000 US. So that gives us a project payback of 11 months, which is pretty pretty stunning. And when you start looking at your NPV versus CapEx, and it really anything over 2 to 1 is a pretty staggering project. We're currently running at about 6 to 1 at our mid price and 11 to 1 at spot. So that really does put it into context, I think. Through the process, and there's been a lot of talk about this, the CapEx did double from the PFS. The fundamental reason for that, as we've explained previously, is that the wet tails dam that was going to come into the project at the end of year 2 under the PFS, we are now moving to a dry stack tails facility. There are lots and lots of reasons for that, permitting being one of them, but given where we are at Hillgrove, it's definitely the best way to move forward. The overall capital cost between the two is very little, except that the dry stack tails dam will be moved to the front of the project. We need that infrastructure in place at the front. So the capital that would have been spent at the end of year 2 that didn't come into startup capital has been moved forward. And that was the largest single driver of the increase in it. We think there is absolutely no negatives on doing this, but it did increase that pre-CapEx price. Some of the other changes we've made is we've put a lot more flexibility into the grinding circuit. We've put a lot more flexibility into the gold recovery circuit. And we've switched a little bit of focus from producing the maximum grade antimony product to recovering the most product. Now that might seem a little bit strange, but what happens there is that if the grade drops down a little bit, you do get some penalties that come into that. But at $60,000 a tonne, it's worth taking a little bit of a penalty if you're producing an extra tonne. So that has modified the circuit. We've put a lot more flexibility in the circuit to help us do that. So these costs have increased. The CapEx, if you look over 2 years, not much at all, but year 1, certainly it has increased it, but they all make a huge amount of sense and they all actually get repaid very, very quickly. So that was the single biggest driver for increasing the CapEx. And if it allows permitting to move more rapidly and get us into production quicker with the amount of cash that comes out per month, that difference gets paid off very, very quickly. And as we say, mid-project payback at 11 months is really quite spectacular. We are still targeting ore by 2026. Q2 there, if we can get everything in place, which includes financing, some tweaks to government permits moving forward, and the greater permitting for the whole project. But at the moment, we're on track for that, to try and ensure that we have ordered the long lead time items for the project, and that's going to help us keep track to that. Looking further at those numbers, I think probably everybody's seen this presentation, so it was given last week. I won't labour on it too much. We will produce 40,000 ounces of gold. The all-in sustaining cost for that with the antimony credits is negative $1,300. Pretty staggering amount. And on this one, if you do have a look at spot, it's minus 3,000. So that's pretty exceptional. As a lot of people do ask, we do use a gold equivalent calculation. Why do we do that? It's actually at the request of most people, because people don't understand if you say you've got 1.5% antimony, the market's not used to that. People go, what does 1.5% antimony mean? So we do convert into a gold equivalent, given that we mine gold and antimony at the same time. So it's not like there's two different ore bodies here. It's all coming through, it's all going into the mill, and we are processing gold and antimony at the same time. So all our models and everything else internally are also done on gold equivalents of what we take out from underground. So that's one of the reasons we do it. You know, for example, we're 1.5% antimony. That's equivalent at the moment to about 9% copper. And most people wouldn't know what 1.5% antimony means. But if you say this is a 9% copper mine, people get on the page pretty quick. So that's one of the reasons that we do quote gold equivalents. We also quote production and numbers of both. So if you want, you can work that through. At the moment, we're producing about 5,000 tonnes of antimony per annum. That is 7% of world supply, so we will be a globally significant antimony producer into a market that currently has about a 40,000 tonne shortfall. So numerous operations the size of us could open and you would still have a significant shortfall. The DFS numbers, as we've talked about, really quite exceptional. On the funding side, we have a huge amount of interest, it's fair to say, on this. Everybody is extremely positive. We see that moving forward very quickly. As we have said consistently, we see this as a very typical mine financing facility of somewhere between 60-40 debt and equity and 70-30. It will sit in there. Given that every mine financing facility will have a call for an equity component, that's just how it works, and that's beyond our control. So there will be an equity component of this. It will be minimised as much as possible, and we will be maximising debt, as people do. And at the moment, with an 11-month payback, why wouldn't you? So we're very much looking forward to those conversations, moving rapidly forward from this point. So the DFS results really do suggest that this will move along fairly early. And let's be honest, if you've ordered $19 million worth of long lead items with a prepay on that, arguably we've already made the decision for this project to progress. So that's where we're standing at the moment. We are flat out trying to move this into production so that we can access the quite incredible prices that are out there at the moment. We do have a 7-year offtake with Wogan. There's been a lot of comment about that. We get paid on that by world standards, and that is the fast markets price at Rotterdam. So there are no deals with Wogan on prices outside that. We take the standard fast markets price at Rotterdam and we get paid accordingly. There is obviously other fees involved in that, but we get paid mine gate. But we do access, and I'll say it again, we do access current world prices. Where we are at the moment is we've converted about 1/3 of our resource into reserve, and we did that to get to where we are now. It allowed us to move quickly, an initial 600,000 ounces out there in the reserve. To do everything we've done, that is sufficient. We still have more of our resources to convert, and we need to put some economics around those. Those resources are sitting in other areas and other distinct ore bodies that we just haven't got to yet. So we look forward in the future to having the time to convert those resources into reserves by applying the economics to them necessary to do that. And because we now have the DFS, we have a much better understanding of the economics to allow us to do that. So we look forward to that. We also look forward to the exploration results coming from the 4 drill rigs that we have on site. And they are working on numerous things. They are looking at extensions to ore bodies, infilling the current inferred to allow that to move into measured and indicated, and extending zones up, down, and discovering new zones. And the potential along strike, we have multiple zones here, so there is something like 20 kilometres of strike of these zones within a few kilometres of the mine. And we're looking forward to accessing those zones, particularly the nearer surface mineralisation, which historically wasn't of a lot of interest. The antimony made processing the gold very difficult, so the old timers didn't go there. They went straight down into the gold rich zones at the bottom. So there's a huge amount of near surface potential up there that we have to trap, and we look forward to releasing results on those as we move forward. This is easily a 20-year mine life zone, and I think that will become evident as we move along. Why have we been able to move so quick, and why do we have a good understanding of what's going on? We have a process plant on site, and it's done everything that we are doing. It has produced an antimony concentrate, it has produced a gold concentrate, and it has produced gold bars. We will be doubling the size of this facility, which largely involves putting in a secondary crushing circuit, which was missing from this plant. We will be putting in further tower mills grinding to allow us a lot more flexibility on the concentrate and cleaning the concentrates up so that we can maximize both recovery and grade, but more importantly, at the moment, recovery. So we will be doing those tasks, and we will be putting in the dry stack sales facility, which is essentially 2 large filter presses that sit as part of the plant. So most of what we're doing here is in place. It's not doing anything new. That has allowed us a huge advantage. We also have about $150 million worth of underground development already in place. If you see our website, you can see the local Channel 7 news crew driving around in there. That is a huge thing and a spectacular de-risker of all these facilities being in place. We don't have to put the decline in. We don't have to deal with all the issues that may arise during that. We can go and take our metallurgical samples directly from the ore body now. It's a relatively easy task, albeit underground mining is not the simplest thing to do, but we have a much better handle over these things, being able to drive into the ore body and sample it, than people who are dealing with drill core and have never walked around in it. So as a de-risk project, really doesn't get too much better. And if you look at our peers, and really there is only one peer for us in the world, and that's the Perpetua operation in the States. They are a $3.5 billion US build, unbelievably technically orientated, and their grade is 0.07% antimony. We are 1.5. So they have to process 8 million tons to produce the same amount of antimony as what we will from 500,000 tons. So if you look at a risk option, this is about as de-risked as you can possibly get because of these incredible facilities that we do have on site. We have previously mentioned this is Australia's largest antimony deposit. It's in the top 10. Arguably, it's considerably higher. I think we generally quote it's about number 8. The others are primarily located in China and the various stands around the world. Those resource numbers haven't changed for many, many years. We know that they're being depleted because of the drop in production from all of them. So we're arguably higher up than that. We've talked about the process plant. We have acquired a Kidna Gully, which is an accommodation facility in a straight line. It's about 1.5 k's from the process plant. That has saved us a huge amount of work and money to have a facility for those workers that will be flying in and flying out, build teams and such what. The vast majority of our people we intend to base in Armidale, and currently all of our technical team on site are based in Armidale, so that's going extremely well, and we're very committed to doing the right thing by Armidale and having as many people as possible based in Armidale. It helps the project, but it also helps the people, and we're seeing people coming to us because of the education facilities that are in Armidale and the location and various other things. So that is working extremely well for us, arguably better than what we'd hoped for. So we're looking forward to moving all of that sort of stuff forward. We have opened a community facility in Armidale town site so that people can come in and ask us questions, and we are engaged extremely strongly with the local community. Very, very quickly on antimony, the big driver is solar panels. The world is using a lot of solar panels, and I think we'll all agree that that probably won't decrease. There's about 40 grams of antimony in a solar panel. In an efficient solar panel, it makes the panel more efficient, so it's something that is really strongly required in there. That's about $2 worth of antimony, and this is one of the unique things about antimony, that if there is a price change, you don't see too much of an effect on the end product. If the price went up 5 times from here, the antimony in a solar panel would cost $10 and the solar panel is worth $300. Within a car battery, the same sort of thing. Within military uses, the same sort of thing. So it's not like lithium, where if the price goes up 5 times, you can't afford to buy the car. The price sensitivity is not affected because such small quantities of antimony are used in each product that it goes into, but there's a lot of them used. Last year alone, there was 6,100 gigawatts of installed solar put onto the planet. Each gigawatt has 380 million solar panels in it, and each solar panel has 40 grams of antimony. So there's a fairly big usage going there. That has largely helped create the world shortfall, along with the military uses as well. So, and we don't see that changing in the near term. We see it getting worse. Geologically also, there is a decrease of antimony in the world because, as is mentioned, and it's same as our deposit, and if you look at Fosterville and Costerfield and other deposits like that, the deeper down you go, they change from being antimony rich to gold rich. So if you've mined a deposit for 30 or 40 years, most of the antimony is gone and you're mining more gold. That has also allowed for the decrease in production around the world. So everything here has aligned to create a shortfall, increased demand, and very solid geological reasons for decreasing that. There hasn't been a lot of antimony exploration, so we're in a unique position to be able to move forward and maximise from that. Talked a little bit about the exploration upside. You can see the strike of some of the zones there. We really are looking forward to getting into those. We've got our Clark's Gully deposit, which has got some stunning numbers in it that have all been released further up to the north. There's a lot of work to do in between. There's a lot of work to do from near surface. There's very few deposits that have been identified here near surface, or if they have been identified, they weren't mined, because antimony does create metallurgical problems unless you have a process plant specifically designed to extract antimony as we do. So what the old timers left is available for us, and there is a huge amount of potential very close by on that. And recent geophysics that we've done has indicated that, you know, that could help us, and we'll be putting some information out about that shortly. So we look forward to really getting into this. We have released some drill results. We started, you know, from a zero rig position essentially at the start of the year, remembering that most of the holes we're drilling are deeper. The rigs average about 20 meters a shift. So if you're drilling a 600 meter hole, it takes a while to drill it. From the time that is then logged, cut, sampled, that takes 3 to 4 weeks to get those results back. And then we need to evaluate that information before we can put it out. So we do get accused for not putting results out. We have put results out after the first 2 months of drilling, and typically that will be the sort of timeline. And this, if you look at our peers in this, that's pretty well how it goes. We cannot just release results from a hole the second that we get them, because we need to fit it into the context of what we're doing. And of course, it is exploration, remembering that not every single hole hits absolutely stunning results. So you would expect that we will be getting results out roughly every 2 months from drilling as we go through. It's not a weekly or a monthly task to do that. We have a very comprehensive team on site. I think we've got about 7 geos working on this now. We've just set up an exploration facility in Armidale itself, so all our logging and interpretation, everything will actually be done in Armidale in a excellent facility that we've been able to acquire there. So there's a lot of work to do. There's a lot of work that has been done, and we do release that as soon as we possibly can for lots of reasons. Moving forward, we've talked about the offtake with Wogan. That was a very critical deal for us. It is a real science selling off LME metals. It's not a huge market. It is about 160,000 tonnes a year. It's a very, very specialist job, and that's why Wogan were brought on early to reassure everybody that we've got that covered. As I said, we do sell mine gate, and we do access current prices. So where it goes is of interest to us, but not significant to us. Wogan are there to market the product at the maximum price anywhere in the world to whomever wants it, as per off-takers in every other industry. We're in a pretty good financial position at the moment. Last released $34 million. That has allowed us to be in a position to order long lead items, to bring a lot of drill rigs on, and most of that money is assigned to exploration. It's allowed us to finish the DFS, and it will allow us to move forward and keep everything rolling while we're sorting out, I should say, project finance. I'll do a little bit corporately, and then I think we'll go to questions. Most people would have seen this already, and it's probably more important to get into the specific questions that people have got. 400 million shares on issue, so fairly tight shareholding there. Our major shareholder is Gauge Capital out of China. They brought in the money to allow us to do this deal in the first place, and they have been a wonderful shareholder. They really haven't participated since, so they've moved backward down through the register. But they gave us support when nobody else really would, and we thank them for that. 1832, very large Canadian fund, has come in very, very strongly to hold the number 2 position. And our top 40 shareholders speak for about 65% of the register, and our top 40 have been extremely stable over the previous 6 months. So the support from them has been wonderful, and we thank them for that. Board management, we've got an excellent team. We cross a lot of skills here. Mark, our chairman, very good on the corporate side, having done that for more than half his career. The other remaining part was technical as a mining engineer, and myself as a geologist, but I've spent a lot of time building and operating plants. Rachel comes in with specialist skills in the areas that aren't covered by Mark and myself, and that's the environmental science side and the psychology side. And if you think about our biggest issues moving forward, it will be people and the environment, so having a specialist in that is great. The rest of the team, very well experienced across all sectors of the industry, and have participated very, very strongly in what we've been doing, and have helped put everything together. So it's been a great effort so far to achieve what we have to this point. And realistically, I think we'll end it there and take questions. Andrew?
Excellent. Thanks, Ron. You can stop sharing your screen. That's great. Look, you've answered many of the questions that have come through in regarding to financing, placements, the Wogan offtake, current drilling programs, and when to expect results. A couple of questions have come through just about the tungsten opportunity that has been disclosed previously. Do you have any updates there?
Yeah, on the tungsten side, we will be getting something out shortly on that. The DFS sort of got in the way a little bit. We're hoping to get something out this week, but it'll be coming out shortly. Tungsten has been historically mined at Hillgrove. There is a tungsten circuit in the process plant to extract tungsten. It hasn't been a focus for us at this point, but we're moving into that area now. And we do look forward to getting out some initial resources on tungsten in the very near term. And that's basically to show people that tungsten is there. Within the tails dam, we have about 600 ppm tungsten that we've released before. So that's sitting in historic tails dams. That's what you get if you don't even go looking for it. So it's a very interesting commodity. Its price is getting up there with antimony at the moment. I think it's currently sitting at about $50,000 a tonne for tungsten. We see it as a very interesting byproduct. As I say, it hasn't been a focus for us to date, but we are starting work on that, and Nick, our metallurgist here, is starting some test work on how do we maximise tungsten extraction there. The mineralisation sits within the gold and antimony in most areas, but also has discrete zones. And we have assays there that we've previously released of sort of up to 7% tungsten in areas. So there's a lot of work to be done on tungsten, and we look forward to bringing that information out in the near term.
Yeah, thanks, Ron. Another couple of questions just around permitting. Are there any outstanding approvals required for the open pit or underground? And is permitting required or permit approvals required for funding to come through?
I think yes to all of those, to be quite honest. Yes, there is still permitting to go. We are currently looking at extending the operating permit that the mine did have when it ran in 2022, and then overlaying that with the permit that we've been working on since day dot, basically when we acquired the project, which covers starting mining at Clark's Gully, which is a new open pit, putting in the other facilities that we need, and expanding to 500,000 tonnes per annum. The permit that was held in 2022 was for 250,000 tonnes. So we're looking at reinstating that, and the only part of that permit that has expired is time, and that expired unfortunately during the administration process. So we're looking at renewing that. We see that as hopefully a very near-term process. These things are beyond our control, unfortunately, because it is New South Wales government, but they have been excellent to work with, and so we look forward to getting that permit. That will allow us to do everything we want to do, and then the longer process, which is probably from where we sit 8 months or something like that, that will allow us to do everything else we need to do. So that will allow us to start doing all the tasks we need to do, ready for processing next year, and then the overlap over that. That's the current plan. Is that permit required for funding? Yes, it is. The feedback to date is that the restart permit, by extending the timeline, will be sufficient for that. But these are the questions that we're having with financiers at the moment. But there is an extreme amount of interest in that, and remembering that we do have a nice piece of funding in the bank already to allow us to move forward on all these sorts of things. So we are well funded for the near future. We will be signing the agreement with MIQM to undertake the project build in the near future. The legals have been done for that. So there's a huge amount of things progressing. We are not on hold for anything. Everything is continuing at the one time. But yes, the permits are required. But remembering that we're not doing anything new here. This is not a brand new build in a paddock that nobody's ever stood on. This mine has, and this area has been mined for over 100 years. And the project did run in 2022. The New South Wales government have a very large white paper out on helping the critical minerals industry. They've just put specialist funding into the critical minerals industry. We met with the minister last week, who came to our booth. They are very, very keen for this to go, but one has to tick all the boxes on the way through.
Thanks, Ron. Just a question in regards to the broader economic impact for the local New England region. What's the potential for local employment opportunities, and how will the region benefit from the development of the Hillgrove project?
Yeah, I think on our numbers, we will put something like $500 million into the local economy over the next 8 years. So that's a fairly sizable amount of money. We are trying to have as many people as humanly possible employed in the town. That is very important to us. So you then get them spending their money into that. I'm very aware of what's happened to Kalgoorlie, a town that I lived in for 16 years, that's become a FIFO hub and is much worse off for it. So we won't have that sort of impact on Armidale, but it very much try and keep people in town so that they get a good work life as much as possible, and all our senior staff are 5-day week people, so that they get to go home. The education facilities in Armidale, really, they've got some of the best private schools in the country. So that's not an issue, which is very much an issue in WA, and why there's so much FIFO. Yeah, we have that hub in town, as I said, and that is to find out who we can employ. Obviously, we will be bringing in specialist people, particularly specialist underground miners and everything else. But as it stands, we've got a wonderful technical team, and they are all based on site, and we're looking to expand that as much as possible. So yeah, it will be quite significant in the local area. We've got about 140,000 people that live within an hour's drive of us. So there's a big catchment there for us, and we're looking to maximise that.
Right, Ron, we've had a few comments just from attendees today, just asking about current share price. They think there's been a little bit of weakness in the share price, and just associated with that, what catalysts or milestones are we expecting over the next 6 months from the company?
Well, the next 6 months, it is tying up the permitting. It is funding. We're pretty confident we'll be able to talk about a funding partner before permitting is there. I think I've been fairly clear on how we see the debt equity ratio moving on. So, that's the big upside thing there. There'll be lots of little things coming through. There'll be ongoing drill results. There'll be talk about tungsten. There'll be talk about the geophysics that we've been doing and things like that. So all that information will keep flowing through. Yeah, look, from our point of view and from the staff's point of view, it is a little bit disheartening to put such a spectacular amount of effort in and produce such truly spectacular numbers. And there seems to be thinking out there, from what we understand, that we're immediately going to go out and raise 140 million in equity. That's just not going to happen. We've never ever said anything like that, and it's just really not going to happen. So we will be increasing reserves. There's not too many negatives in where we are going at the moment. I think that will be realised. We need to get out and talk about it more, and hence the reason for doing this, so people are on the page with what we're doing. There is still a huge amount of blue sky involved in this, but there's also a huge amount of cash generation ability as well. So we'll get on and do what we do, and people can assess us for that.
Yeah, well, Ron, I think that's a great spot to leave today. You've provided a very in-depth presentation of the DFS, the economic valuations, and also, we've answered a number of questions that shareholders have wanted to ask. As always, Ron's happy to communicate with shareholders. You can drop an email through to Ron. All contact details are on the Larvotto website. But Ron, I'll just hand over to you for closing remarks.
Yeah, thanks, Andrew, and thanks for organising this, and it's great to get that out. We do try and get as much information out as we possibly can. We are tied up by what we can and can't say sometimes by ASX, but we do get things out. We certainly get accused quite often of withholding information. That is something that we don't do, apart from the fact it's illegal, and as much as I love the company, I'm not willing to go to jail for it. So everything that we can put out is out there within the confines of which we work. But we're more than happy to talk to people. We do a lot of conferences. We do a lot of presentations, and we do try and get as much out as we possibly can when we can. Getting an ASX release out is a unique experience if you've never done it. The amount of effort that it's involved in it is truly spectacular. And it's fair to say that the slightest mistake is criticised quite strongly. But we do the best we can do, and we are pushing as hard, if not harder, than most other groups I know to bring this project online as fast as humanly possible and get people on the page with the upside potential of it, which is an ongoing task. And now that the team is nearly at its optimal size, that will become easier as we move forward. So we thank everybody for their support. It's been a very tough operating environment in the last 4 weeks. We play by a lot of outside rules. Various presidents changing the game day by day, but that certainly affects what we do. But our primary task is there. Our build managers in place. The builders will be signed up very, very shortly. The funding will come through because people really want to do this. The amount of the capex is really not that great in the great scheme of things. I mean, find a project that generates this sort of NPV with $140 million build. You won't. It's as simple as that. You just won't. And then what's the risk? Well, most of it's already in place, so it's pretty de-risked. So it is a unique project. It's in a unique location, which gives us a few issues, but it gives us a huge amount of benefits.